Absolutely. I mean, there's certainly the mistakes, and I don't think we have enough time to go through all of the mistakes, but they've been numerous, and they'll be, I'm certain they're certain to expand going forward. We're making mistakes every single day. The key is that we try to make mistakes that don't kill us. You try to make mistakes that, as in the Kaiser example, that there's enough of a buffer there that you've put in that the mistakes that you expect that you will be making. There are the things where the known knowns, of things that that there are risks, there's uncertainty, and sometimes, your research and your belief leads you to think that it will be resolved favorably to you, but there's a risk that it may not. And then, of course, there are the things that you don't know, the events that you haven't necessarily considered, and those are research errors. Those are situations where there's something that happened that we didn't consider, or we didn't consider the magnitude. And Kaiser was the case of not fully understanding just how massive the inventory in the suppliers was, and how aggressive the destocking would be, and how that would suppress sales for Kaiser as that inventory was sort of flushed through the channel over a period of quarters. Didn't realize up front how severe that would be, and yet it didn't matter to the investment thesis. There was so much of a margin of safety in that at that point that would we have had higher return had that not been the case? Sure, but our returns did not suffer. We did not have, there was no impairment of capital as a result, because there was enough of a buffer built in. So those are the things that we're trying to look for.